Sylvia and Arturo Escobar here with Escobar Homes and Family with Keller Williams. And we are here today talking about mortgage rates with Diane Reyes for Centennial. We've known Diane for over 10 years now that we've been working together. And maybe you're sitting here watching this video and saying, I know who she is, because you've probably done loans or refinancing with her. So Diane, we appreciate you so much, and we're really looking forward to hearing from you on what the interest rates are looking like, what they're going to be looking like, and what we can do about that. So Diane, would you share with us some of the information that you have for us today?
Well, first of all and foremost, good morning, and no, thank you for having me here. Yes, as you've probably seen me in one of the workshops where I've done a loan for a family member, but here we are, and we're here to hopefully help your family get yourselves into a mortgage and understand what the market is looking like right now, especially with all the changes that are occurring. So let's start with maybe interest rates.
Mm-hmm.
Interest rates are climbing. Right now is the perfect time to start your application process going, get yourself pre-approved, because interest rates are, unfortunately, they are going up. Just last week, I saw an increase of 0.25% just from Monday through Friday. You want to lock yourself in now so that you're able to, of course, qualify. And there's many instances in which because of the interest rate going up, the payment is affected. You end up with a higher payment, and in a lot of cases, you will have a hard time qualifying. So get yourself pre-approved now so that you can start searching for your home.
Okay. Go ahead.
Yes.
Go ahead,
the interest rate impacts the monthly payment. So if, example, you're struggling to qualify because you have outstanding debt and your debt ratios are high, and with a higher interest rate, that might just make it impossible to qualify. So get your application, contact Sylvia and Arturo Escobar, or contact me. Our information is here so that we can talk to you. If you have any questions, we're here to speak to you.
Great. And I really appreciate also, we've had several clients in the past who maybe they don't have all of the information, and they think they don't qualify, and then you walk them through the process, and you kind of provide the numbers so that they could know whether or not they truly qualify, or what they need to do in order to be able to qualify in the future. So that's really helpful. Do you have any suggestions for people if they're thinking about buying, besides doing it now so that they take advantage of the interest rate that is available right now? Do you have any other suggestions for them?
My suggestions is watch your credit. Do not go buy a car. Do not max out your credit cards. Do not be applying for credit cards. They give you a 20% discount at JCPenney. Do not do it, not prior to the mortgage, because all that affects credit. And if your credit is affected, you're going to end up paying more than what you saved, the 20% at the department store. You're going to pay a lot more on that mortgage because you've destroyed your credit scores. Not only do you destroy your credit scores, you can possibly destroy your chances of qualifying because you've maxed out your income versus debts. So therefore, it'll be a lot harder for you to qualify. I have young couples who are trying to buy a home, their first home, and in their minds, I just want a little townhome. That's all I need, a 1-bedroom, because we're just starting out. Perfect. The problem is you have a $600-700 car payment and you don't qualify. Don't do that. That is one of the biggest challenges we have in approving, is because you max yourself out before you start your mortgage search.
Mm-hmm. That's a good point. Thank you. So what kind of down payment assistance exists right now? Like if people are really thinking about buying a home, what's out there right now for them?
So we still have IDA, which is IHDA, and it's still $6,000. It helps with down payment and or closing costs. So if you're in a position where you're limited on saved up cash or funds in your bank account, I suggest we talk about IDA. For the people who do qualify, we do look for at least a 640 credit score, and debt ratios max is 45%. So it does allow you in some instances finance less than no program. However, the program is good because it will help you with either one. You do have to be prepared with 1% of the purchase, and that would be it. So example, 150, you'd have to be prepared with $1,500. Other than that, during negotiations of contract, Arturo and Sylvia can negotiate closing costs. Therefore, pretty much everything else is covered, the down payment plus the closing costs.
Okay, and some of our clients are DACA. Can you speak a little bit about the DACA clients that may come our way?
So DACA is an excellent question, because the impression was DACA does not qualify for a mortgage, and that is untrue. The government has recognized that they're as eligible. If you're eligible to work in the United States, you're eligible for a mortgage. So there is no difference between a resident alien, a U.S. citizen, DACA, or just as same eligible for any mortgage product.
That's great. And some of our clients have already bought a house and they already have a mortgage, and that they've gotten through you or someone else. But for those people who are watching right now, they can also refinance. Would refinancing be a good idea at this time as well?
So if your current interest rate is high and your payment is high, and a lot of times the ones that are refinancing right now is because property taxes have adjusted and they have gone up significantly to some people to where they can no longer afford the payment, then I'm refinancing those borrowers still. And yes, bringing down their payments. Right now, the advantage of refinancing is in some instances, the interest rates, yes, definitely are still lower than what they financed originally at, which could have been 5-6%. But the other is if you carry mortgage insurance, example FHA, which carries that mortgage insurance, and because of the increase in property values, you now have over that 20% equity, which then allows us to remove the mortgage insurance, bringing down your monthly payment. In some cases, it's significant. It's $300-400. I mean, it just depends on that size of the loan.
And of course, we can help them look at all those numbers and see if it would be something that would be convenient to them.
That is correct. We can work with scenarios and start there.
Great. Well, wow. Thanks, Diane. Is there anything else you would like to add, or?
Other than jump in, get yourself pre-approved. If you have questions, our contact information is here. Let us know and we'll be glad to answer your questions.
Great. Thanks, Diane. You have a good day.
Thank you.
Thank you.